Hi everyone, Isa here, and in today's video, I wanted to give you some quick do's and don'ts about refinancing any home loans or property loans that you might have. So let's get started. First of all, definitely do refinance. At least have your loans reevaluated, reassessed every 2 years minimum. 1 year maybe, but realistically 2 years minimum. That's where it kind of makes it worthwhile reviewing the whole situation that you've got and going, it's worthwhile potentially going through the whole process of refinancing again because, refinancing, applying for a loan in the first place can be, quite cumbersome, and refinancing definitely is as well. So you don't want to be doing it every year, but definitely every 2 years at least, have yourself reassessed, have a little financial health check. And if that's something that you need, I'll talk about that a little later in the video about how you can get that. Okay, the next one, don't. Yeah, and this is a don't. Don't chase a cash rebate when it comes to refinancing. Many lenders offer, anywhere from $1,000 to $4,000, I think some of the offers are at the moment, just for you to refinance their loan over to them. Yeah, and this doesn't necessarily come with the best interest rates, though they may be good. It doesn't necessarily come with any other major advantages aside from the fact that you are, quote unquote, getting a cash rebate. But if it takes you a lot of heartache and a lot of time and a lot of issues to be able to refinance with these lenders, it may not be worth chasing that cash money. Okay, because especially at the moment, most lenders are severely behind. They have a huge backlog with regards to assessing loan applications. So yes, they may be offering you, anywhere from $1,000 to $4,000 just to transfer your loan over to them, but it may take them in this market anywhere from 15 to over 30 days to even pick up your application and have a look at it. And for many people, that time frame could mean a loss of opportunity. So don't go with a lender just for the fact that you can potentially get a cash rebate. And remember, that cash has to come from somewhere, particularly when it comes from the banks. They're not sharing just profits here. Yeah. What most of the time happens is their existing patrons have to pay for that. And as soon as you refinance, you are one of their existing patrons. So be careful about that. Okay, next do. Let me check my notes here. Do work with a finance broker, or as I like to call them, a finance strategist. Yeah. And the reason why it's important, or I highly recommend using a finance strategist, is because they are working for you. They're shopping around for you. When you go directly to a specific lender, that lender can only give you whatever they have to offer within their own policies. Whereas a finance broker, often it won't cost you any more at all. Yeah, not any more in rates or fees. However, they have the relationships and the knowledge to take your information and share it and assess it against dozens of lenders, and this often can put you at a overall higher advantage if indeed your goal and your aims are to build your property portfolio. Yeah, so I would highly recommend working with a finance strategist. Don't, on that note, the flip side of that, don't choose to go with a bank or a lender just because you have existing accounts with them. Yeah, this is their way of luring you in. And sometimes it's a great idea, but it isn't the case all the time. You shouldn't be going with them just because they've got your details or just because you've got an existing relationship. Yeah, you should be choosing the lender that you go with because that lender is going to give you the opportunity to expand your portfolio, and not they're going to look beyond just that next step. What you really want is someone that's going to go, okay, what's the next 4 steps ahead? Yeah. How can we work that out? And sometimes it's not that the next lender can help you with the next 4 steps. Sometimes it's about a mixing and matching of lenders that'll actually get you that bigger portfolio. And that's why I recommend going with a finance strategist, because they can work that kind of thing out for you, or particularly my guys anyway. the guys I recommend, experienced finance strategists, know how to plan your moves forward. It's kind of like playing chess. Yeah, you're playing 4 moves ahead. And once again, it's not about that one lender. It's about the combination of lenders that'll ultimately grow your portfolio faster. Not only will it help grow your portfolio faster, it'll also help diversify some of your risks. So that's important. All right, next, do. Okay, do access as much equity within your existing properties as you can. Every year I say this, but it seems to get harder and harder to get finance. And you don't want to have to go through this every year or every few months. So as much as possible, access the equity that you currently have. And if you work closely with a finance strategist, they'll know the right language to use to butter up those lenders to get access to that money for you. Whereas a lot of the time with lenders, if you go directly to the banks, they're there to protect themselves, which is understandable. So more often than not, they're coming from a risk perspective and they're purely just trying to keep their interests safe. Yeah. They might be leaning more towards that than towards, stretching and pushing so that you can grow your portfolio. So definitely, once again, that's where a finance strategist comes in extremely handy. All right, don't. Yeah, and this one I know sometimes is slightly controversial, but I stand by it and it has proven to be quite powerful over the years for my clients. And this don't is don't cross-collateralize your properties. What does that mean? For those of you that don't know, this means that a lender may give you more money. So let's say you've got a house and they decide, you decide you want to buy an investment property, and you go to them and say, can you give me more money? And they say yes, and you can use the equity in your house as leverage to buy the new property. Doesn't even need to be the equity in your house. Sometimes what they'll do is they'll just bunch your properties together. So you might have, 2 separate loans in your head, but what they're using as securities are the 2 properties. So if anything goes wrong with your investment loan, potentially your home loan, or your home rather, the actual physical home, could be at risk, right? So do not cross-collateralize your properties. And now a lot of people think, but you have to get access to the equity. No, you don't. Yeah, you 100% do not need to do this. There are definite ways to structure your loans, even if you're using the same lender. There are definite ways to structure your loans where you do not need to cross-collateralize your properties, where the contracts state that you have a separate loan against one property and another loan against another property, and they are delineated, they are completely different, yeah? So that some of your risk is spread out. Even better if you use different lenders, of course, yeah? So that allows you to diversify once again. So once again, don't cross-collateralize your properties. Are there times that I have definitely cross-collateralized? The answer is yes, but they would be rare and far in between, and they would be almost the last resort, okay? So there's a little tip for you there. Okay, do go for a low rate. Yeah, of course, everybody wants to pay a low interest rate. So definitely go out there, go for a low interest rate. That is important. It'll help your cash flow. Important thing for you to look for in particular, especially right now, is check out the fixed rates at the moment. If you watched the video last week, you will know that the RBA have stated that they don't anticipate interest rates changing until 2024. And if that is the case, that means we've got a good few years where we can enjoy lower rates. And sometimes if the banks have the similar view, their fixed rates are likely to be even lower than the current standard variable rate. If their fixed rates are higher than the current standard variable rate, it is an indicator that they believe rates are likely to go up in that time because they want to be able to protect themselves, you see. But definitely go for a low rate where possible. However, this does not mean you should be chasing the lowest rate possible, okay? Do not chase. So that is my next point and last point as a quick tip. Whilst you do want low rates, do not go and chase the lowest rate possible just for the fact that it is the lowest rate. What you really want is to be chasing opportunities. Yeah. So it's a bit of a balancing act. Yes, we want it low. However, what we really want is the best opportunity. And that is not usually reflected in finding the lowest rate possible. As one of my mentors once said to me, yeah, don't go chasing cents when you're trying to make dollars. Yeah, don't go trying to save cents when you're trying to make dollars. Yeah, so definitely look for the low rates. Don't go chasing the lowest rate if it means it won't allow you to grow your portfolio forward. And how do you know if it won't? Once again, that's where you work with a finance strategist. Now, for those of you that know my background, you know that I have a background, or I've got over a long time now, over 18 years experience in the finance industry. That makes me sound really old. So I've got that background, and nowadays, whilst my focus is on the property side of things, I work very, very closely with finance strategists who understand my strategies, who understand my clients, who are willing to go the hard yards, yeah, and work out these long-term plans with you guys, with our clients. So if you are in need of that kind of expertise at no extra cost to you, I cannot recommend my guys enough. They are not from my company, just to be clear, but they are people that I have worked closely with over the years and who I trust to be able to find the right deals for you and work out the strategies for you. And if this is something that you need and you need this kind of help, please feel free to write a comment below, or better yet, send us an email directly or get in contact with us. If you liked the information that I've given you here today, please do click the like button, click the subscribe button, and that little bell icon, which will allow you to know when we release more videos. If there's anything you would like me to answer in the meantime, please feel free to write it in the comments below or send us an email, and I hope to include that in my next few videos. I look forward to chatting to you really, really soon, and I look forward to hearing from you.